Hello and welcome back to another episode of the Stock Market Update brought to you by Conservative ETF Investor. I am your host. My name is Ken. Today's date is July 16th, 2017. And here we are on the homepage for Conservative ETF Investor. Once this video is done, I'll upload the link right here so you can click right here in order to gain access to it. What else? As you scroll down on the home page, you have our current recommendations, which the most important thing that I want to bring out to you is that we are currently all on hold postures for our 7 ETFs over our 5 asset classes that we follow. If you're new to conservative ETF investors, you can find out about our portfolio over here under the Portfolio Ideas tab, our percentage allocations for each one of the different 7 ETFs. And an ETF is basically just a mutual fund that trades like a stock, but it's a very diversified portfolio, and we are very conservative. You can see our recommendations here as well under the current recommendations tab. And going through it, you can see what our transaction date, what the symbol, what the index is that we're following, which in this top case here is the S&P 500. That's the most widely held index out there. The ETF symbol is SPY, otherwise referred to as spiders. They're referred to as the S&P 500 is spiders, the NASDAQ 100 is cubes, and I don't think the other ones really have an acronym. GLD is so close to the word gold, it almost spells gold. Anyways, you can see here our transaction date and what we did on that transaction date. These are all buy recommendations, and you can see the dates that we made those buy recommendations. And here's the beta of each one of the ETFs, and our portfolio beta has a beta of 0.63. So this is a very conservative portfolio for someone. And that's it. Under the more, you can see our disclaimer and then go through all of that. So you can go through that there. And then here we are back on the homepage. Back at the homepage, if you want to drop me a line at the bottom of the homepage, there's a contact us form where you can send me an email. Okay, now that we have all that out of the way, let's see how well the portfolio is actually done. Okay, so far since our buy recommendations, our portfolio was up 15.3%. And since 2017, our portfolio is up 8.02%, not including dividends. Going back to our homepage, let's look at our current recommendations. Our total dividends so far is 1.8%. So you would, since our buy recommendations, you could tack on another 1.8% for the dividend. Okay, that takes care of that. We are now going to jump right into the charts. We like to go through each one of our charts of the ETFs that we follow. I use the chart platform, the chart plat format of stockcharts.com. I'm a member of them, and that works out quite well because they save everything for me. The chart that I like to use for this portfolio is the weekly chart. You can see the word weekly right there. So each one of these candlesticks represents 1 week in duration. I use a time frame of 5 years, which gives it very good history going back. During the last week, the S&P 500 had a wonderful week, up 1.42% for the week. Now, you'll see that candlestick that's right there. Let me push this over so you can see the thumbnail. This candlestick is the last week, and you can see that this last week was really quite incredible because the market was beginning to soften up over the past few weeks. And I thought we were going to come down and touch this lower trend line, support line here. You can see that this ETF has been trading in an upward wedge pattern. And things were really looking soft on our momentum indicators, which are the MACD as well as the slow stochastics. And I thought that we were going to come down, touch the lower trend channel, and then bounce and come back up. But this ETF held support here, and it actually, if you look at these bottom lines, the tails began to push up, and then just everything brought it in. It looks like it brought it to new all-time highs. So hooray for the S&P 500, and being buy and hold is absolutely paid off with this ETF. Absolutely, it's been just incredibly strong. It's just it just goes up and it doesn't look back is what's happening here. Okay, so our momentum indicators right now, you can see that on the top one there, the MACD is pretty much flat. And on the slow stochastics, we are above 80. And the signal line is, it's actually above its signal line as well, but it's like right on it. But this is it's all very bullish posture. So the it's showing good signs of strength in the S&P 500. We're going to move on to our next ETF, which is the NASDAQ 100, symbol QQQ. This is our technology portion. Look at the fantastic week that this ETF has had, up 3.16% for the week. Did not make all-time highs. You can see here that it didn't break out above this 143 level. So it did not make all-time highs, but still a very incredible week for the NASDAQ 100. Going down, looking at our momentum indicators, you can see here numerically that the slow stochastic is above its signal line. So it's made a bottom and it's now crossed above its signal line. That's a bullish sign that we're going to come back up and go back up above 80. The MACD has bottomed and is going towards and closing distance on its signal line, although it has not done so yet. The thing that bothers me is that we're still in this high territory for the MACD numbers, 4.455. It's a high number for the MACD on the weekly charts. So I did expect it when I saw the MACD and everything coming down for it to come down to and at least touch this upper wedge. You can see that we were trading in an upper wedge similar to the S&P 500, but the NASDAQ 100 was so strong right here at this candlestick right there. You can see that it just jumped right up above it and has been on the other side of this upper trend channel. Now, this was acting as a resistance line, but once we penetrated above that, now it acts as a support. And you can see that on this tail right here with the black candlestick, the week previous to this week, how the tail came down, touched the lower, the upper trend channel right there and just bounced right from there. So it did absolutely act as a support line. You can see all that support all up and during this time frame here too, which is a pretty good time frame because each one of these candlesticks is a weekly graph. So this looks like it's over 2 months right there in this trading pattern. It was extremely tight, upper ranged, and all that. Momentum indicators. You can see the same, very similar to the S&P 500, bottomed, traveling on the MACD, closing in on its signal line. Slow stochastics, same thing, bottomed and is just above its signal line. All right, so market is looking bullish here. Let's move on to our next ETF that we want to look at. That is going to be the small caps. We're going to go to IWM. IWM is the Russell 2000 Small Cap Index traded on the New York Stock Exchange. Had a very modest week, a weekly gain of 0.88%. Let's come over here and look at our thumbnail. You can see that in the thumbnail, we've been pretty much in this a very tight trading pattern from approximately 138.37 to 141 range. It's been trading in this range over the past 5 weeks or so. and it's just still holding that pattern, drifting along, kind of hugging this lower. This was trading in an upward trading trend channel, and then came down and just been hugging this lower trend channel for quite some time now. It's been a couple of months, and just waiting to see whether we're going to come back up and get into this trading channel or break down below this trading channel. So far, it's been holding. The MACD was at a high level and has since softened greatly. So it is in a much more reasonable area where it can really go in either direction. It's currently trading parallel to its signal line, but below its signal line, which is a bearish posture. And the slow stochastics had a little bit of turmoil and back and forth going in there, and you can see that all in the movement. But right now it's above 80, and it's above its signal line, bullish plus bullish. So right now, and especially looking at the other indexes, it looks like it's going to come back up and come back into this trading channel, is how I'm interpreting this right now. Although we are in the bearish time frame for the year, the old sell in May and go away. May quite didn't work out as a going away, and possibly July will be the one. But August and September are due to be some pretty not so positive months. Let's move on to our next ETF. Our next ETF is VEU. VEU is the Vanguard, our favorite mutual fund company, all world excluding United States fund. It's traded on the New York Stock Exchange. It had a wonderful week, up 2.95%. Look at this thumbnail and look at this wonderful bar just jumping out, closing above all-time highs. Um, just absolutely positive. So this is showing signs of strength greatly all world outside of the United States. We have a very diversified portfolio. Going down to our momentum indicators, you can see that the MACD had softened greatly and was getting ready to penetrate below its signal line, pretty much hit the signal line, bounced, and came up above it. This is all very positive and bullish actions. The only troublesome part is that this is still in a very high range for the MACD for this ETF. You can see over the past 5 years, we did touch this level right in this time frame. And going up from our charts, you can see that we had a little bit of turmoil, came up, but then it came down. And then, so it had a lot of volatility while this MACD line was correcting down. But then once it ultimately gave that bottom out right there, which coincidentally was exactly about the same resistance point as this. This was a resistance point where it softened up, came through above it, and then it became a support line, and that support line got tested over here. And then that was a perfect buying opportunity in the past. That was in 2013 to buy this ETF. Okay. Anyways, that's where we're at right now with that. And what else are we going to do? We're going to move on to our next ETF. That was VEU. Next one is TLT. TLT is bonds. So here's our bond portion of the portfolio. Symbol TLT, 20-year Treasury bonds. Traded on the NASDAQ Stock Exchange, had a modest gain of 0.5% for the week. You can see that the bonds had topped. We had reached a top and then we had softened over the last 2 weeks, and then this week it appears as if we've reached a bottom. I thought we were going to come down and touch this lower trend channel before we did a bounce, but right now it's holding at this level right here, which is just above 122.50. The MACD has topped though, and is traveling towards its signal line, which is in a bearish posture. But if this ETF can can hold support here and climb, this MACD will turn around above its signal line, and it's above zero, bullish plus bullish. That would give it a momentum push in order to get towards this upper trading channel, which, by the way, from its current, let me just go to inspect mode, from its current closing price to up here would be a gain of 4.87% or thereabouts, which is a nice healthy gain. On the MACD, though, you can see that, excuse me, on the slow stochastics, rather, we are traveling down and we are below 80. We're below its signal line, bearish plus bearish. But if this can hold right here, that slow stochastics will also turn around, show a bottom, and then begin to climb. Now, also, I want to point out, do you notice, let me just go back to the inspect line right here. Do you notice when I put my bar right there, right over here in this area, that was once a resistance port, that's now a support line. Also, you can see over here, there was the resistance, that's also going to be a support line. And it's very close to this line here too. It's very, very close to that which was support in the past. So I get the interpretation that we actually are going to show and hold support here and go up. That's my interpretation of this. All right, so that's the momentum indicators. Although we're bearish here in the slow stow, that can change around, and the MACD, same thing. Although it's showing a bearish posture, that can turn around if this can hold support. All right, let's move on to our next ETF, which is VNQ. This is our real estate portion. VNQ is the symbol. This is traded this is brought to you by Vanguard. It's a REIT, which is a real estate investment trust. This is your real estate portion of the portfolio. This pays a wonderful dividend of 4.44%. Had a modest gain, a nice gain of 1.32% for the week. Now, this ETF has been trading in somewhat of a choppy pattern going back to mid 2016, let's just say. And then the range kind of tightened up. We were in these loose range, and then we kind of tightened up and been bouncing in this tighter trading pattern here, where you've got this as a support line, and here's a tops, a rising tops trend line, which is acting as a resistance line. Right now, we're smack dab in the middle of it. So we did come down, bounce, and you can see the nice tail on that where the bulls just took control and pushed that ETF up. Seasonality, this is also a good month seasonality for this ETF. So we, at this point in time, have every expectation that this is going to come up and at least test this rising top trends channel to see if it will bounce up above it, but it should at least come up and test it. You can see all that volatility here in the MACD where it's just gone back and forth, back and forth. Currently, it's above its signal line and running parallel to it. Slow stochastics is below its signal line, below 80, and traveling down towards the 20 level. Bearish plus bearish. But like I said, all of these things combined, I believe this is going to come up. Again, we're on hold postures on all of our ETFs anyways. Here's our last ETF that we're going to look at today, which is gold, symbol GLD, traded on the New York Stock Exchange. Weekly gain 1.29%. Now, what a volatile back and forth ETF this has been during this whole time frame. You can see all the back and forth, but this here is acting as a strong support line, and you can see that we have just closed on this support. We came down at this red candlestick here, and we held at that support line, came into the following week and pushed up, and now we're closing at 116.77. That's our weekly gain of 1.29% right there. Let's look at our momentum indicators. Now on the MACD, The MACD is below its signal line and just crossed below zero. So that's bearish plus bearish. And the slow stochastics is below 80, below its signal line, and it just is above 20. Bearish plus bearish. So in the short term, it looks like we're going to be hugging around this support line a little bit longer. And that does appear as if it's going to be the case. We do have a gap here that usually when you see a gap, it does ultimately want to close the gap. So maybe not next week, but the week after, we may show a bounce coming off of this support line, and then our momentum indicators and everything will start to bottom turn around, and we'll have that momentum to come up. Now, this is a declining tops trend channel resistance line that we need to overcome, and this trend channel has been in place for years, at least 6 years. And we cannot get above it and stay above it with any type of decisiveness. It's been testing it, it's been prodding and poking, but it's failed and it's come back down to support here again. And this support has been hanging around since 2013. So it's going to take a lot of energy in order for this to break out of this channel that it's been trading in. And we're waiting to see if that will happen. We're still on a hold posture for this ETF. Okay, now we're going to look at our volatility indicators. The first one is the VIX. The VIX, which is a very widely known indicator, is an indicator that basically tells you the volatility of the S&P 500, and this is an inverse indicator. Now, what do I mean by that? What I mean by that is, as this indicator comes down, the S&P 500 goes up and makes you money. So here I've got the S&P 500 down at the bottom. Here is a chart of the S&P 500. You see right here where the S&P 500 dropped dramatically, boom, right there, boom. Well, what was happening to the VIX? The VIX was going up dramatically. And then as the VIX was dropping down, the S&P 500 was going up. So you can see it's an inverse indicator. So the fact that it came down over, oh, by the way, my chart has now changed. I'm no longer on the weekly chart. For the VIX, I use the daily chart with a 1-year time frame, okay? Okay, now looking over here over the past few trading days, we've come down. You can see the MACD has softened, come down below its zero, below its signal line. That's all bullish for the S&P 500, and the S&P 500 showed it during the week when it made all-time new highs. And you can see here, boom, we've made all new time highs. Here's your troublesome part. You're now trading, not trading. Your indicator is now at 9.51, which is below 10. Well, these is pretty much the lowest levels that it ever is at, ever. And when you are at low levels, what happens? You ultimately are going to come up. And again, as you come up on the indicator, the S&P 500 will come down. So that is the troublesome aspect of this indicator, what it is representing right now. It's at the lowest levels that it can pretty much possibly go, that it's going to go. And when you're at the lowest levels and you can't go any lower, the only place to go is higher. When this index goes higher, the S&P 500 goes lower, generally. That's how that works. Okay, so there's some risk in the S&P 500 right now that is showing us on the VIX. Let's move on to the next one. The next one is the VXN. The VXN is just like the VIX, except it's the VXN, for the NASDAQ 100. So this tells us about the NASDAQ 100 and what it's doing. Again, it's on daily chart, 1-year time frame, same thing as the VIX. And you can see that we have come down greatly over the past few trading days. And the MACD is just fallen off of a cliff. And meanwhile, this bottom chart right here is the NASDAQ 100, symbol QQQ, and it has just taken right off. You can see that here in the thumbnail. Boom, straight up. It's just fantastic. So anyways, Right now, it is not trading at all-time lows like the VIX. It's trading over here. Not trading. The indicator right now is at the let's see, what is the exact number? 13.8. So right now it's at 13.8 closing level. There you go. You can see it right there in the thumbnail, and it can go really in either direction. Um, I got two moving averages in here. I got the 50-day, which is the blue, and the 200-day, which is the red. When the 50 crosses above the 200, that's a negative for the NASDAQ 100. And that's when all of this was happening right here. And then the faster moving average closed above the slower moving average, which was a bearish posture that it was gaining into. But then you could see where we had resistance and then just came back down. So currently the 50 is above the 200, but you can see that it has topped and it is traveling towards the 200 and closing distance on it. If this indicator can remain below the 50 and the 200, that 50-day will close back below the 200, which is a bullish, then it will be back in a bullish posture again. During this whole time frame, when the 50 was below the 200 and traveling south, the NASDAQ 100 during that time frame was traveling north because it's an inverse indicator. Okay, so that is basically everything that I want to show you today. Again, this is Conservative ETF Investor. I am your host, Ken. I hope you've enjoyed this week's episode for the Stock Market Update. Enjoy, and I'll see you next time.